All right, good afternoon, everyone. This is Josh from Trader Minute. Welcome back to another recording. Right? This is recording, and so you'll be able to get a chance to replay it back later. And also, all those who aren't on live can, come access to it. Those who are can come back to it for added notes. Right? So welcome again. Name's Josh. I'm excited to be here. Talk a lot about the today. I'm specifically going to talk more about the earnings and a lot of the things that I like to look at that stick out to me that I've learned over the years. Just a little background about me. I've been investing in trading for probably 12 years now. I used to do it full time on my own, and it got such a time consumer for me. I realized that I wasn't spending enough time with my family, so I kind of pulled back the reins a little bit and did a little bit more of it part time, and then I got back access to it again, started teaching it on my own. I taught a lot of people one on one, individually. I've done it online, I've done it in seminars. So I love the market. I love the options plays. I love the opportunities, the chances to hit it big, the emotional roller coasters. You've all been there. You've all experienced that, whether you're new to trading or whether you've been doing it for years yourself. There's just that attraction to it. So I'm excited again to be a part of it here with Jeff and Carl and everybody here at Trader Minute, and it's just going to be an exciting ride. So you'll hear a lot more from me. We'll be a best of friends, and we'll just move forward. Okay, so again, earnings. Hey, so the focus today is earnings. Jeff mentioned that earnings season kind of kicks off with, or traditionally people say it kicks off with Alcoa. That's always how I've always remembered it. Even though I never cared much for Alcoa's earnings, just how some of those companies you just don't care too much about. Just never liked them. They never worked the way you wanted them to, for whatnot. And so yeah, I always like to look at the leading into, because it gets you heads up, gets you ready for what's about to come, and especially for next week. So for those of you who don't know, earnings, again, there's pretty much going to be earnings all the time, but the bulk of it has about a 6 week range, 4 to 6 weeks, with it really starting to get heavy starting next week. Right, so we got a couple of the big financials coming out. Everybody likes to look at. Everybody likes to watch the J.P. Morgan, the Wells Fargo. Okay, that's what we're kind of tracking and watching and seeing. What are they going to say? What's going to come out? Is there any surprises there? Is something we should be aware of that wasn't in the numbers before? Now, during that first week, after that happens, a lot of other financials will come into play. Our Morgan Stanley trade that we're in, I think, comes Thursday or the following week or something. So it's a little bit down the later end of the earnings. Which I guess just a few days after. So we want to pay attention to that. Now, after that, the following week, I don't know if any of you've noticed that some of the other bigger players come in. That's when you get a couple little tidbits of great companies like an Apple or an IBM, a Johnson and Johnson will come in. And a lot of people like to play trades. I used to do that all the time, where I'd play a simple call option or put option off of Apple in anticipation of a big bump, a big spike, because it just historically likes to do that. I just kind of say, well, because I bought an iPod this year, it's only going to go up, so I might as well expect on the upside. It's kind of yeah, it's definitely a gamble or risk type of a trade that you're looking at. So, just be aware of some of the companies that are coming out. All of you are. And first and foremost, I want to take you to a good place, because for years, a lot of people are like, well, when does earnings come out? You kind of have to keep a log and pay attention and go look at each company individually to find out when their next earnings is. Isn't there a great place to go and see when they all come out? And one of the ones that we like to use here is streetinsider.com. So if you don't have that in your watch list somewhere, go ahead and put that in there. A great site for lots of good information, good news, good reports and updates about the market as a whole. I know we've mentioned it several times on here, and so it has this earnings calendar. If you go to the EPS Insider, it's showing, yes, the EPS Insider, that first drop down menu there, earnings calendar. Now, what's cool is this will give you an idea. Let me make sure it's all on the page here. It gives you an idea of who's coming out with earnings. It'll give you kind of a couple of the headlines or the bigger type companies, and leading up to it. Now, be aware, if you're not aware that these can change, it's time for you to be aware of that. Okay, don't be surprised if they change the date, up or down a few days. It really doesn't affect that company too much. I wouldn't worry about that, but just be aware that sometimes we'll make a trading decision based upon that, and nothing happens, and we think, well, okay, my trade didn't go the way I thought it. Earnings is over, and it turned out the earnings was a couple days later or something. So just be aware that this is all. Most of these are subject to change, but generally speaking, they're going to be pretty accurate here. Now, they've got the dates here. They got the B represents before and A is after. Okay, so it's cool. It tells you, okay, today, Thursday, you got 8 companies that announced before the market opened and 10 that announced after. Okay, that one there is the one that's during the day. Um, so Double A, Alcoa, okay, Family Dollar. Carl talked about that this morning. Looked at the chart on that. And we'll probably go look at a couple of these and see what has happened. What impact has their announcement had on the overall stock and the direction that the overall stock might be going. So cool little place. If you know a symbol, one that you're looking at, a lot of times, like, we'll just click on here. This will go in. It'll tell you today's. And if you go to another date, in fact, let me show you this, because this is a free thing that you want to have access to. If you go back to earnings calendar, if I go click on, like, JP Morgan, Wells Fargo, we're interested in that next week, Tuesday. If we go in there, you'll notice it should just pop up for today's date, or actually it just went right to the stock. That's another cool little feature. I accidentally clicked on the date, or the symbol, not the date. So the date, it'll automatically populate back up to today's. You just have to change the date. Okay, pretty simple to do. Let's go to the 14th. Let's see who's showing their announcements. And up it comes. Usually a lot of these bolder companies will be the bigger companies, S&P 500, and, the Dow, and then you'll have a handful of other ones. And again, very simple to click on these, give you the basic information of what, right now it's NA, not applicable. It doesn't matter because it hasn't come out yet, right? On those. And so we're waiting to see what the consensus is, what they're expecting, are they going to beat it, and so on. So it's a great tool, great source to come back and see, and we'll come look at some of the earnings news on it. So right below the earnings news, a great thing to watch as well, because that's where we're going to go see what happened today. Who made the announcements. Okay, so we'll come down there. You'll see Family Dollar there. FDO, it misses quarter one's earnings per share by 1 cent, and it warns for quarter two. Keep that in mind, because we're going to talk about that. Okay, so what kind of factor does that have on the stock today, next week, and going forward? We want to know that. Is that something that we should be watching, monitoring, especially if we're going to trade on that, and so on? Josh, what do you think the estimates as an earnings website resource? I'm not sure. I haven't looked at that. I'm not. Am I understanding your question, Jazare? I apologize. Estimate as an earnings website, or is that the name of the website? Let me know. Okay. All right. So, couple companies to watch and monitor. Obviously, the financials we talked about, but another one I want you to pay attention to next week is going to be GE. Now think about that. Why would I want you to think or watch and monitor what happens to GE? For the longest time, GE was just GE. You put in a light bulb, no big deal. And that's, I always remember GE from the light bulb little icon that it has on the light bulbs I used to have growing up. But next week, the same day that our Morgan Stanley announces. Okay, why is GE a major one to be watching and paying attention of? Um, it it's a big deal because think about it. What sectors, what industry groups does GE not impact? Okay, what are the major industries it's involved with? Financials. Does it impact the financials? Absolutely. It's got a lot of financially um, connections in that market. It's got a lot of connections in the energy market, a lot of connections and involved in the industrial. GE is just one of those stocks that is pretty much in every sector. Okay, and it's a great parallel to what happens with economic data. Okay, when economic data is strong, GE tends to be strong. When the data is weak, GE tends to be weak, and vice versa. GE a lot of times will follow that, and the market a lot of times, or the economic data it's just a great correlation to see what's happening overall. And so it's a great one to be watching. We'll look at it closer. I'll keep you up to date and post it on what some of the things that I'm seeing with that. But just a great indication of the health of the economy globally. Okay, so there's three things. First off, how does earnings? What is earnings? Okay, let's pull over my little notes here. Okay, so three things to want to start to talk about. First is top line earnings. Next we got is bottom line. You've probably heard these terms before. Another one will be margin. Okay, so first off, what is top line? Top line in this basic purest form, and a lot of this will probably click to you because for a while you might be looking like, okay, it beat its expectations, it beat its numbers, revenues is here, earnings per share is there. Okay, and sometimes they say they beat their top line, they fell short and missed their bottom line, and so it's just a play on words, but basically in the simplest form, top line is going to be revenue. Okay, revenue of a company is everything that comes in. This is before they pay the taxes. This is before the costs, wages, etc. Everything that just comes in. There's the straight top line. Okay, bottom line is going to be what? Bottom line is going to be after the taxes, after they pay their expenses, after wages, etc. Anything that goes out that's necessary to help the company grow. After that, then you get what's called the bottom line, or the profits, most commonly known as earnings per share, right? Okay, what the company's earnings per share are, or profits that they can take home, that investors like to look at. And so both of those terms are numbers that investors pay attention to. What is the top line? Do they have enough revenue? Did they beat that expectation? What's the bottom line? Did they beat the expectation of their earnings per share? And that can be an impact on the direction the stock can move on a short-term and potentially a long-term basis. So why do we care about those numbers? Because we want to make sure the company is doing what they say they're doing. No manipulation is going on. But at the same time, you got to also be aware that some manipulation can occur, because aren't they trying to make that look as good as possible because they know that's what the investors are looking at? They got to report these numbers. They got to look at that and know that investors are paying attention to that. And so they're doing all they can in the management of the companies to manipulate and engineer whatever they need to do, legally and so on, and to make that bottom line look better, to make those earnings per share and their profits look better. So one of the major things that you've probably seen a lot of lately to help make that earnings per share number look better for the investor, which in turn can lead to the stock being better, is going to be share buybacks. Okay, so what happens with share buybacks? What does that do? What does that do for the company's shares? Well, think about it. If I have a million shares, and a million investors have it, and my earnings per share is whatever, $10, then that's simple math there. Where if all of a sudden I have a buyback where, okay, me as a company, I go and buy back half of those, now I've got 500,000 shares at $10 a share. That really boosts the earnings per share up, doesn't it? Okay, so that's one of the things that you've seen a lot of, companies buying back their shares to help make that bottom line number look a little bit better, despite the fact that the revenues may be staying stable. It's just one of the ways to continue to make the business grow, even though the income isn't coming in like they expected or wanted it to. Okay, so you'll see a lot of those, Deere and Caterpillar, Apple doing a lot of that stuff lately. Okay, and you'll probably continue to see that go on. And it's funny to look at those numbers, and if you were to plug in the earnings per share back into what it was before they bought those shares back, it gives you different numbers. So it's just a creative way to show you how that can increase it. Okay, not that that's bad, just so you know. Okay, that's just what they do. It's just how it happens. So just be aware of that. All right. So margin, the third one. Okay, we got top line, we got bottom line. What is margin, and how is it? How does investors look at that or use that in their determination into a company? Well, to give you an example, let's look at something like Intel. Okay, a tech stock. When it comes to Intel, nobody really cares too much about the revenue of Intel or the earnings per share of Intel. They're going to be a lot more interested in the margin of Intel. Okay, and you're going to find this to be, pretty prevalent and pretty common among the tech stocks, the tech industry. The reason why is just volatile. It's just a volatile industry. It's constantly changing. It's relatively new as well, right? And when you compare it to the traditional Dow stocks and the financial firms have been around for hundreds of years, and GE and DuPont and all these bigger conglomerates, mega cap stocks. But it's constantly changing, and so investors will look at the margin as the bigger play, the bigger reading into their earnings. So let me explain what margin is and how it works. So Intel creates a chip, right? They make these chips, and let's say the cost of to make that chip is $2. Okay, so after everything's said and done, they make it and then they turn around and sell it. But they can kind of manipulate that price a little bit, can't they? It's their product. Supply, demand, is it really necessary? Can we control that? Absolutely, they can as a company, and they do. And that's where the margin comes in. So let's say they sell it for $10. If they're selling it for 10 but only making it for $2, their margin is $8 there. Okay, that creates a whole new avenue for investors to look at and say, oh, okay, they're making a nice little $8 profit off of every chip that they sell. Yeah, I know that this month they may not sell as many chips as next month or next year, or seasonal type stuff. Hey, and so they pay attention to that and see where's that margin at. Is that increasing or decreasing? And it plays a big role into the impact that their earnings announcement can have on that company. So tech stocks pay close attention to that. That's really the bigger value when it comes to it. Not so much you still want to pay attention to the revenue and top and bottom line earnings per share, but pay attention to that. Watch for key figures about margins increasing or decreasing, because it does play a much bigger role on the direction the companies are going to move here on out. Okay. After earnings comes, some of these companies will, on their own free will and choice, give you a guidance. A lot of times we call it the full year guidance, okay, or next year's estimates. Some will do it on a quarterly basis, some will do it on a yearly basis, and so on. And some don't do it at all. It's really up to them to do that. It's a nice tool and feature to have, but just know that that's plays a big role into what happens as well. And so we want to pay attention to that. Now, why do we want to pay attention to the guidance? We're definitely watching what's happening today. What came in? Did they beat their numbers? Fell short, etc. But think about that. If you have, let me type this in here. So if you have the, beat versus miss. then you'll have what's called raise versus lower. Okay, so what are these as relative to time? Okay, well, beat versus miss is really a past number, isn't it? It's already happened, right? This is what happened last quarter, last year, etc. Okay, so this is past, present when they announce it, whatever you want to call it, but this has happened. Okay, this is history now, and then that makes sense that your risk raise versus lower is going to be your future numbers, right? Your future numbers or the guidance. Okay, so you, with as a future number, those can be adjusted, and they often are. And and so you'll have a reaction when companies beat or miss their expectations. You have that quick reaction that happens now. But then now you also have that raise or lower or the future guidance that kind of gives you an idea as to where the direction of this company may be going longer term. So for those of you who are longer term investors or traders or looking to buy and hold type of stuff, this becomes very valuable. And you'll see here in a minute, it also gives us an idea as to the direction that most likely this stock may be going in the near future in case we want it on our watch list. In case it's a potential trade. If we see something that might set up for us, we may want to take advantage of that. Okay. So past, future. Okay, pay attention to the raise and the lower and when those come out. So obviously the most bullish scenario that we're looking for is we want stocks to beat their numbers and to raise the guidance. Okay, that's going to be the most bullish type of a report that we can get. Most bearish will be just the other two. You're going to miss their numbers and then they lower expectations for the future. Okay, pretty makes sense, right? Yeah, that makes sense. They're not going to hit their numbers. I'm not sure if I want to invest in this type of company. They're unsure of where things are going to go. Okay. All right. Let's go back here. Whoops. Oh, good. There it is. Let's go back here and let's go take a look at the earnings news. Let's type in. Whoops. Let's type in our Micron. I know we've had that on a watch list, on the radar, things to watch for. They announced yesterday, right? And this is just kind of interesting to look at it. And I don't know if all of you went and looked at this just to see how big the news was and reports. But Micron came in. Okay, their earnings per share was 77 cents. Okay, and the consensus was 44. Okay, so a good 40 something percent gain there on their earnings per share. So do they meet or miss beat or miss their numbers? Well, easy, Josh. And they beat it. What kind of question is that, right? Okay, so why was it such a big jump? Why did it move so much? Last quarter, if you look at it, they had a $1.51 gain and the consensus was 24. That's a much bigger profit, much bigger return for them versus their expectations. It didn't move near as much. One of the things you want to pay attention to is it's not always quarter over quarter. Okay, these are seasonal type things. Investors are looking for, hey, what's the progression year over year? Okay, and so it's nice to see the quarter over quarters because it gives you an idea that they're on track, they're on pace. But if you go look at what happened first quarter of last year, which would be quarter one of 2013, you're going to see that they had a negative 27 earnings per share. Consensus was negative 19. Okay, so they did a lot worse then too. So when you compare that to what they did here this time around, massive turnaround. Okay, revenues 1.88 million. Okay, jumped up to 4.04 billion. I don't know how accurate that is. I don't know if that was a misprint on them to put an M there, but let's assume it was a billion. That's still a double in revenue from last year. Okay, whatever it is that they're doing, people are buying back into it. I don't know. That's the numbers I don't really need to worry about. I just want to see, hey, where's your revenues at? What's your increase over last year? Are you starting to get back into the swing of things and starting to move? Is it really worth the $20 to $24 price that you're at right now? That's really what I want to know. Is there value in this stock, in this company, for me to go out and invest in? And this gives you a good idea. And yes, they beat their numbers, and their guidance doesn't show it there. Yeah. Okay. That's Micron. Now, one other thing I want to show you here. Okay, because Micron's a tech company, isn't it? So, do they really care too much about the revenues as well as the bottom line as maybe some of the other companies? It's there, but remember, we also talked about that third factor with margin, didn't we? Okay, look at this headline down here that came out yesterday there. Okay, Micron shows massive, oops, not highlighting it, come on, highlight it. Massive gross margin expansion. Okay, Jeffrey says that. Okay, so the owner of the company said, hey, we're having a massive margin increase on our gross margin. Okay, so now all of a sudden the $10 chip that costs $2 to make, maybe it costs $2.50 to make now, but they're selling it for 12, 13, $14. Okay, all of a sudden that margin is increasing. Investors really like that. You saw a big move and big rise in the stock, and again we'll probably come back to it to see, does it really warrant that big jump up? Okay, is it going to pull back down because it jumped up too much? Is it going to fill that gap? A lot of times it does, but a lot of times it gives us an opportunity to buy into a well-valued stock in a solid company that's showing good growth, good gains. Okay. Pulling up the chart on that. Again, investors have a tendency, oops, come on. I did highlight it. There we go. Companies tend, or investors tend to have a tendency to want to come in and short this. It moved too much. It was too big of a gap. Let's short this, take advantage of the fill that it might have. I like to say, be cautious there. We definitely don't do that. We don't like that. We look at more, hey, does it really warrant? Is it really worth the fact that it jumped up to 24? Is it going to retrace and fill in that gap? Again, a lot of times it does. Sometimes it doesn't. Sometimes it just continues to run and run and run, and we really don't get another buy-in opportunity till months down the road. We should have taken advantage of it the last time. And so, because of that, you want to start to pay more attention to the numbers after they've come out. We've now seen the history. We've now seen what it has done. Can it continue to maintain that? Can it continue to grow based upon the guidance, based upon what they've shown us that it's done? Okay, and that's where you start to go and look a little bit more into the fundamentals on this, especially if you've not in it now and you're looking to possibly buy into it later. Okay, so I want to do that. Let us go to finviz.com and let us put in Micron. So again, you're all familiar with the site. One of the things I want you to start to pay attention to is not so much the PE. Again, it just doesn't really matter that much anymore. It's really the forward PE that we want to pay attention to. Okay, this is what their future price to earnings multiple is, what they're anticipating or expecting to be based upon, again, the guidance, the numbers, what they're anticipating to happen. You look at that number, average is right around 16, so we like that to be low, right, to begin with. But not so necessarily that it needs to be low like that. It's just we want it to be a lower number than what you're seeing on the earnings per share. Not this year. Earnings per share next year. Okay. Anytime you can see where the forward PE, and let me pull this up here. There's a good little formula for you. If your forward PE is less than your EPS, or earnings per share, next year, this is highly bullish. Okay? And I'm going to abbreviate it now. Okay, forward PE less, greater than, and yeah, nice grammar, greater than PS, earnings per share next year. This is highly bearish. Okay. So this year is showing a 208%. Next year, 908. So I guess now that we're in the new year, we should look at this year. It's a good number to show us. So looking at that, you can see the forward PE is a lot less than this year's expectations. Okay, based upon the fact that it is jumped up to $24, their earnings that they're anticipating and expecting in the coming several months to a year is showing some pretty good numbers there. Very good numbers. Okay, and that's just a great sign that the value that it's at now is warranted. It's worth it to me. I look at that and say, hey, there's a good chance that this is probably going to continue to go higher. It may never come back down to $20 range for another year or so. Okay, does that mean it's time to invest it? No, we're gonna wait, just look for those buy-ins, those opportunities to get in. But a great tool is to follow that, to give you an idea as to whether or not the value of that stock is there. And too many times people overlook that when it comes to earnings. It's still a fundamental issue. All the other numbers just don't mean as much to me as that. Okay, let's look at a couple others. BAC. Well, come on. Okay, 1256 forward PE. Okay, next year 47%. This year 256%. Much lower than that. Very good signs for Bank of America. Now there's one caveat, one exception to this that I want you to pay attention to. Let's go look at, for example, one of the positions we're in, BA. BA is one of those mega cap stocks, large companies. The Dow 30's been around forever, a staple in the economy as far as companies go. That's kind of the only exception to the rule that I would use. Hey, their forward PE right around 18 and a half. This year, next year, 12%, negative 4%. Okay. Rely a lot more on the technicals on these. Rely a lot more on the end numbers, the numbers that come out, their revenues and their earnings per share. Okay, that's the caveat I want you to focus on. What are our other trades? Not MS, sorry. MS. Okay, 1268 forward PE. Next year, 2250. Okay. Is Morgan Stanley gonna come back down, test these levels? Probably will sometime. But as far as a fundamentally sound, valued stock, I heard Jeff say earlier today that these prices are really good, and I totally agree. The value is there. Okay, the prices are there. They're built in. The companies are doing great. Their expectations are off the charts on some of these, and so the continuation of them to continue to rise and increase in stock price is a lot more likely to happen. Okay, and so this earnings season, I want you to pay attention to a couple of those things. I want you to come to this earnings insider, go to the calendar, and go look at the news as well. Go look at when they make their announcement. Go back and compare some of the announcements that have happened. Again, Family Dollar, like today, it dropped after the open. Okay, no surprise there. Why? Because it misses. Okay, they missed, and it warns for quarter two. Okay, that was the bearish signal that we talked about. They missed their numbers and they lower their guidance, or at least they're warning about it, which is essentially saying they're going to lower it. Be careful, it may not happen, right? So go look at what's happened, compare that to notes, and see what you can find, and start to create a list for yourselves after these make their earnings numbers. After they come out a day or two and they've updated those on the sites, look at and say, ask yourself, is there value here? Does that current forward PE a lower number than their earnings per share next year? Because that's what we want to find. That's where we're going to find the value in it. And you're going to start to find that there's some good stocks out there that have pulled back, that have tested new lows, that even look like they're somewhat in some downtrends. Don't be surprised if I start to throw some of those out there for you to keep an eye on. Okay? Because those are the ones where I like to call them, the early movers. I like to try and get into the ones that not necessarily have already in those trends and on those trends, but watch and potentially take advantage of the ones what nobody else is looking at. That we can maybe catch it on its way back up, or catch it early when it's starting to consolidate and pull back down. Okay. So I hope that, well, it should be helpful to you to look at that, give you an idea a little bit more as to what investors are looking for at earnings. Pay attention to that. Use that earnings insider here to give you the news on that, because it's going to tell you every day, and I like it. It's black and white. It's simple there. It tells you, comes right out and says it for you. I was looking at Acuity Brands here this morning, and it jumped up a little bit. Tops quarter one earnings per share by 12 cents. Okay, better than expected. Revenue for the quarter came in, and you can go look at all the history and see what kind of numbers they have there. Okay, and it tells you about all the stocks that came out. Okay, alrighty. So again, I'll be on chat as well, helping out there, and probably be seeing a lot more of me on there, and be excited to chat with each of you a little bit more. Feel free to tease me all you want. I just know that I just be ready for me to dish it back, right? Okay, everyone. Thanks again for coming. Again, this will be recorded. Come back, replay it, and I'll see you on chat.